First, it was Dr. Copper, now it's lumber. Hello, this is Chad Carnes, Chief Market Strategist at ETFGuide.com. Thanks for joining me today as I look at falling lumber prices and what it may mean for your portfolio. In an article I recently wrote entitled Are Weak Commodity Prices Signaling Deflation and found on ETFGuide.com, the focal point was on copper, its historical relationship with the health of the overall world economy and its currently bearish chart pattern. The takeaway was that copper has been declining since 2011, suggesting an economic slowdown and potentially deflationary scenario. A long-term chart of copper and its bearish potential is now shown on the screen, and you can see the technical pattern setup of a bearish head and shoulders pattern breaking down earlier in 2013. Copper used to be considered the leading indicator of the world's economy, but since 2011 its price has fallen even as the world stock markets climb. Which will prove correct, copper or the equities market, is the million-dollar question. Perhaps stocks are disconnected with reality, or perhaps fundamentals are better than copper is suggesting. Either way, mixed signals abound. But another leading indicator, lumber, is known as the barometer of the housing market. When lumber prices are in an uptrend, typically so are housing builds, home prices, etc. Lumber prices have been very strong over the last 5 years, having turned up in price in early 2009 and making new highs recently. This has helped buoy the homebuilder equities as well, but all that changed in March. If you believe the media headlines, then all is good in the housing sector, but we prefer using leading indicators, not coincidental ones, such as the price of lumber. Lumber has had an extremely strong correlation with housing stocks, as the chart on the screen now shows. The bottom section shows the correlation through time, having hit as high as 0.90, and more recently the 100-day correlation is still a very high 0.81. This extremely correlated relationship likely means it is the better leading indicator for home builders in equities markets, and that lumber should be followed when it comes to those markets instead of other leading indicators such as copper. There are warning signs now showing up in the lumber market, as you can see in the recent drop in lumber prices on the chart. Lumber has taken a cue from copper, precious metals, and other commodities, falling over 20% the last 2 months. Is this a sign that home builders, the housing market, and the equity markets as a whole are finally about to roll over? Looking at the last few years, and in particular the last few months on this final chart, you can see in more detail the price collapse in lumber of over 20% from March to late May. Meanwhile, home builder stocks, which is the black line on the chart, continue upward. The last time these two highly correlated markets became disconnected preceded the 2011 market top that sent stocks down over 20%. How long will this disconnect last? The bottom part of the chart as well shows the correlation on a shorter time frame of 75 days and shows that since 2011, the last time lumber and housing stock prices got this disconnected was indeed the 2011 sharp market sell-off. Home builders have already pulled back from the recent highs, but looking at 2011, it actually took a few months, and shown in black here the home builder prices, took a few months before lumber prices were caught up to. And what I mean there is that lumber prices topped here around in March of 2011, but the home builder stocks they peaked around May, but they didn't really start to fall off until August. So you had about a 5-month time frame there where home builders outperformed lumber prices, but eventually they reconnected as home builder prices sold off significantly. Similarly today, prices in lumber peaked back in March and have fallen and are getting a similar kind of small bounce off that initial fall. Same thing that occurred into the summer of 2011. And then, so perhaps again 5 months from the time lumber peaks, which would be this upcoming August, perhaps we will see a similar sharp decline in home builder stocks. Lumber may indeed turn out to be the new copper in our consumer and housing driven economy. Given lumber's steep decline over the last 2 months combined with the many other warning signs we follow, it may be time to get out of home builder stocks, as they likely won't stay disconnected from lumber prices for long. The ETF Profit Strategy newsletter follows lumber and other commodities using technical, fundamental, and sentimental analysis along with common sense to see what is really going on and find ways to capitalize in the stock, bond, forex, and commodity markets. Thanks for joining me today as I looked at the falling prices in lumber and what it could mean for your portfolio and home builder stocks. And please check out some of our other videos on our YouTube channel and Twitter, as well as our many other investment tools and research over at etfguide.com.